What's up, everyone? Today we're going to learn how we can become rich from Starbucks, okay? So usually, like normal people, not really me, go to Starbucks every day in the morning, right? They go to Starbucks and go there, walk in the door, and be like, yeah, I just went normal, vanilla latte, okay? Vanilla latte, maybe like vanilla latte, probably like $5, okay? $5 every day. Not that much money, right? For a good cup of coffee, it's a great value, right? Good coffee. Okay, look, you get a nice cup, okay? A really nice logo that you can show off when you get to work. Hey, I just went to Starbucks, I got this cup, okay? But more than that, you get the experience, okay? We get free Wi-Fi, we can sit there on the couch, okay? It's really nice, we can see people, we can look outside for a while, we can just take some time to relax. Okay, well, I think you can do all that stuff at home. I think you can make 20-cent iced coffee. If you haven't watched Graham Stephan's video, please go watch it right now. Learn to make 20-cent coffee after you finish this video, though, and that will save you a lot of money, okay? So we're going to switch over to 20-cent homemade coffee, okay? We're going to say this $5 every day, $5 every day. For 30 days is $150 a month, okay? $150 a month doesn't sound a lot to many people, but it could be a car payment, it could be insurance payment, okay? It's a good amount of money, okay? And let's look at that, times 12 months in a year, it's $1,800. Now that's a hefty amount of change, okay? So that's a good amount of money. $1,800, if we turn around and invest that money, it's gonna be great, okay? So we're looking at $150 a month from a $5 coffee. So that's how much we're gonna be saving, okay? So when we look at that, like we could invest this $150 a month into the SP 500, which tracks the 500 biggest companies. And it's basically a reflection of the American economy. So when you put your money into the S&P 500, you're basically betting on, you're putting your money and investing your money in the hopes that the American economy, not a certain company, but the American economy will rise in the long term. In the long term, that's the key. It's not a short-term thing. In the long term, as America and the economy becomes more and more efficient, more likely than not, 99% sure that over the long term, the American economy and the S&P 500, that stock, will increase largely, okay? So if we start investing today, it's not too late. That's what we gotta know. It's never too late to start investing, okay? So knowing that, let's get right into it. So $150. So instead of investing in the S&P 500, we're going to be investing that $150 into Starbucks, right? So we can still go to office and be like, hey, yo, it's a new month. I just bought Starbucks today morning. Yeah, you bought the stock, not the coffee, okay? I like the stock more, okay, because the stock's a lot more worth it. That's just my opinion. I think it's way cooler walking in the office and be like, yo, I just bought Starbucks today. Oh, yeah, what do you get? Just their stock, just $68 of their stock, right? It's so much cooler. Come on, guys. Okay, so we're going to invest $150 a month into Starbucks, okay? So let's look at this. So let's say you start investing when you're 21, okay? Looking back, but it's never too late to start, so starting today, and then you'll be so happy when you look back and you won't regret this, okay? So let's look back. So if you were age 21, 2012, so 7 years ago, okay? We were to invest our money into the Starbucks stock, okay? Starbucks stock. We would have 0 shares because we were just starting, okay? So after 1 month, then we put $150 because $5 a day builds up, and then we would invest in 6 shares after that 1 month. So as we know, when the share price, what the share price was in 2012, it was around $20 a share, okay? As that share price increases, right, to $30, the amount of shares, number of shares we can purchase goes down. It's an inverse relationship. So if this goes to $30, and so we put, let's say, $150, right? $150 every month. So we can buy 7 stocks, okay? There's $10 change. That'll go into the next month, so it'll be $160 instead of $150. But looking at this month, so let's say when it was $30 next year, the same month, okay? So it's $30. So now instead we could only buy 5 shares, okay? So that went down to, and we lost the $10 left over, okay? So we have a lesser amount of shares, though we're putting in $150 at constant. So we got to realize, as time goes on, the share of Starbucks gets more and more expensive. But we're putting in the same $150 every month. So the amount of shares we're going to be purchasing is going to reduce. So here we can see we got around 70 shares, and then here we can see we got around like 60 shares, and then here we got like 50 shares, okay, then here we got like 40, and then 40, and then 30 right here, and then 25, 29, and 28, okay? So it keeps reducing all the way from 68 shares down to like 25 shares, okay? And as the stock becomes more and more expensive, we're only putting the same amount of money. We're not increasing the amount of money because we're just trying to save that $5 cup of coffee, okay? So that's why, as you see, it gets slower and slower as the stock price begins to build up higher and higher, okay? So let's look at this now. So when you're 21, in 2012, you have 0 shares. Age 22, 2013, we're going to have 68 shares. When you're 23 in 2014, 118 shares, and it continues to go down until you're 28 in 2019, in the month of July, when the share price is trading at $85, you will have 289 shares, okay? Just looking at that, 289 shares, multiply the share price on July 1st, of 2019 was $85. So we're gonna have a total of $24,200. Okay, so if we were to go to Starbucks for the last 7 years, okay, 7 years, we were to just go buy our Starbucks latte every day. Okay, we would be in the hole negative. Okay, negative $12,600. Okay, that seems like a lot of money, okay? But you're like, it's a great experience, you know. I know over the long term it doesn't really matter, but I think that's a lot of money, and that's kind of scary to me, okay? So now let's say if you were to just cut the Starbucks out. Like a lot of people just say don't go to Starbucks. That doesn't really help either, because it does help, okay? You're positive, okay? You're at least breaking even. You're at $0, okay? Whew. That debt's gone, right? That debt's gone, okay? So that's 7 years. If we were just to save and not go to Starbucks, okay, or just make like coffee at home, we would have $0. But since we invested the money, right? We're not going and spending the $5 on more clothes or somewhere else or redistributing, which it's not helping the cost. Okay, since we're investing here, we actually made $24,200. Okay, so that's around like $36,000 more than when we were in the hole. Okay, so there's a big difference between going to Starbucks every day. It's not just that you made $24,000; it's that you did not lose the 12.6K and you made 24.2K. Okay, so there's like a 36K difference right there, which is really important. Okay, so knowing that, if we were just to save that money and not spend it, right? Not spend it every day, then we would have $12,600. Okay, $12,600, right? If we were to just save it and put it in a savings account, we would get like $10 a month, or it's not that much money. But if we were to invest it in the stocks and say we're still buying Starbucks, just the stock, not the coffee, right? We would have a lot more money. Okay, so doing the calculations, it comes to around 9.8% annual interest. Okay, so annual compound interest. So as time went on, we were getting 9.8. So we put in $12,600. That's the money we would have spent on coffee, but we saved it and put it into the Starbucks stock. And we have right now, our portfolio value is around $24,200. Okay, so that's almost a 200% increase. Okay, which is 9.8% annualized compound interest, okay, just from investing in the stock, which is great. It beats the SP500, which is around 8%, accounting for inflation per year. Okay, so it's really good. So how do you know like where to invest your money? So if it's a really good company, right? Starbucks is great. You go there every day. A ton of your friends go there, and it's great. You do some research. You find out their board is great, and the company's like foundation is really good. And it's been growing last year, a few years. They had more stores. Their chain is growing really fast, and it's just exponentially increasing. And things are just getting better and more popularity coming to the brand. It's a great time to invest. Like like Amazon, for example, we all use it today, and it's gonna be the future, right? It's basically is the future right now in the present. So that's a great place to invest. It's never too late to start investing. Remember that, guys. Because as we see in this example, in 7 years, 9.8% interest, okay? So his money like doubled in 7 years. So if you really believe in Starbucks, which I'm not guaranteeing this, but if you really do, if you're really strong, if you really have a strong belief in Starbucks, put your money in there. And if you were investing from 21, it took 7 years here to double your money. But maybe it'll take 3/4 of that time. So maybe in 4.5 to 5 years, you'll double your money again. And then, because compound interest starts to grow, because every time the interest grows, the amount of money keeps just doubling and doubling. That's the beauty about compound interest. More and more and more interest on top of interest that you've already gained. Okay, so compound interest are my 2 favorite words. They're the best thing ever. Okay, so 9.8% is what we would have got from just saving some money, some $5 every day, and just making homemade coffee. Okay, and they say After 30 days of doing something, you make it a habit, right? So if you stop going to Starbucks for 30 days, it won't be a habit anymore. So that's how you can break a habit, right? So it's just a good example, really, that even if it's not Starbucks, if you just calculating all your expenses and just making it in one spreadsheet, okay, and seeing this is where I can cut $5 a day, instead of having to earn $5 or more, which you're more likely than not to spend that $5. If you earn an extra $5 from working an extra 20 minutes every day at your work, then you're more likely to go around and just spend that $5 right away because you're like, I earned it, right? But if you're to save that money, it's different. You could invest it more easily, okay? So let's not look at how much more we can make right now. Let's look at where we can save and cut corners, okay? So if we can cut corners in Starbucks and make it at home and save some money there and save $5 a day, we're going to throw that into the Starbucks or whatever you're investing in, okay? Whatever sounds safe to invest in, okay? So this is just how do you become rich from Starbucks, doubling your money in 7 years from $12,600 to $24,200. I hope you guys enjoyed.